Welcome back. Are you ready for more information? In the first half of this video, we'll provide you with the most important facts about eligibility and exemptions. In the second half, we'll cover subsidies and repayment. We will start by telling you who qualifies to get coverage through the health insurance marketplace and whether or not you're required to have it. To be eligible for coverage through the health insurance marketplace, the following general criteria must be met. You must live in the United States. You must be a U.S. citizen or national lawfully present. You cannot be currently incarcerated. For a full list of eligible immigration statuses, please click the appropriate link in the video description. Please note that Deferred Action Status DACA is not an eligible immigration status for applying for health insurance.
Now that you know what makes you eligible to apply for coverage on the health insurance marketplace, you may be wondering what happens if you do not meet the previously mentioned criteria, or even if the options you will be offered will be beneficial to you and of your family. You may already have heard that if you do not have health coverage from 2014 on, you may have to pay a penalty, or a fee. This fee is also known as the Individual Responsibility Payment, or the Individual Mandate. If you did not have health insurance in 2014, you may have to pay either $95 for each uninsured person in your household or 1% of your yearly household income, whichever is highest. Similarly, if you do not have coverage in 2015, you will be fined the higher of $325 for each uninsured person in your household or 2% of your yearly household income. After 2015, the penalty increases every year. In 2016, it will be $695 per person, or 2.5% of your income. After that, the fee will be adjusted based on inflation. The good news is that although most people in the United States will be subject to penalty, under some circumstances you won't have to make the payment. This is called an exemption. For example, if you and or a member of your household is uninsured for less than 3 months of the year, you will not be required to pay the fee. Furthermore, if the lowest priced plan available to you will end up costing you more than 8% of your household income, you will not have to pay the fee. For example, James, a single financially independent individual, projects on his application that he will be making about $11,000 in 2015. After he submits his application, he realizes that the lowest price plan the marketplace has to offer will cost him $152 a month, which is equal to 16.6% of his household income. Because this plan will cost him more than 8% of his income, James is eligible for an exemption and therefore will not have to pay the fee if he chooses to go without insurance.
For a full list of exemption categories, please click the appropriate link in the video description. If you think you may be eligible for an exemption to the penalty, please click the appropriate link in the video description for instructions on how to apply and to locate the correct application. After you submit your exemption application, the marketplace will mail you a notice of exemption eligibility result. If you're granted an exemption, the marketplace notice will include your unique exemption certificate number, ECN. You'll need your ECN when you file your federal taxes for the year you don't have coverage, so make sure you keep your ECN in a safe place. However, if you lose your ECN, you can contact the Health Insurance Marketplace call center at 1-800-318-2596 to retrieve it. Assistance with any part of the application process is available free of charge by calling the Health Insurance Marketplace. You may also find local in-person help by clicking on the appropriate link in the video description. You'll be asked to enter your location, and it'll provide you with the contact information for any navigators or certified application counselors in your area.
Now we will move on to subsidies and repayment. A subsidy is a monetary assistance. Through the Affordable Care Act, there are 2 types of subsidies that you can potentially receive. These subsidies are premium tax credits, PTC, and cost sharing reductions, CSR. We will now discuss the tax credits. A premium tax credit is a set amount of money that the government agrees to pay towards your health insurance plan premium if your income is between 100% and 400% of the federal poverty level. For example, if you are determined eligible for an annual credit of $2,400, you will either receive that as a credit on your tax return or it will be subtracted from the taxes you owe. However, you may also choose to receive this tax credit in monthly amounts throughout the year to help you lower your premium costs. This is called an Advanced Premium Tax Credit, APTC. For the explanation on the Advanced Premium Tax Credit, please click on the link below.
Now let's talk about cost sharing reductions, CSR. Cost sharing reduction is a discount that lowers the amount you have to pay out of pocket for deductibles, coinsurance, and copayments. To qualify for the cost sharing reduction, you must choose a silver level plan, and your income must be between 100% and 250% of the FPL. To see where your household income falls within the FPL guidelines, please click the appropriate link in the video description. For more detailed information on CSRs, follow the next link on the screen. What happens if your household income is below 100% federal poverty level? The federal law established that if your household income is below 138% of the federal poverty level, you should get Medicaid through your state. This is known as Medicaid Expansion. However, it's left up to each state to decide if they wanted to participate. Tennessee is one of the states that chose not to expand Medicaid. What this means is if your household income is 100% or less of the federal poverty level, you are in what is referred to as the gap. If you are in this gap and need medical care, you can reach out to health centers where you can receive health services. To locate health centers in your area, please click the appropriate link in the video description.
Now we will talk about APTC repayments, also known as reconciliation. If at the end of the year, when you file taxes, you realize that your household income is actually more than what you projected on your application, you may have to pay back some of the tax credit that you received throughout the year based on a smaller amount. The amount you'll have to pay back will depend upon your final household income. Households with a final income over 400% of the federal poverty level will be required to pay back the entire premium amount. For those household incomes under 400% of the federal poverty level, repayments will be capped at the following amounts. If your income is below 200% of the federal poverty level, and you're an individual, you will not have to pay more than $300. For a family, it will be capped at $600. If your income is between 200% and 300% of the federal poverty level, the repayment will be capped at $750 for an individual or $1,500 for a family. If your income falls between 300 and 400% of the federal poverty level, your repayment will be capped at $1,250 for an individual or $2,500 for a family. Again, if your income falls above 400% of the federal poverty level, you will have to pay the entire amount back.